So whether or not we see a rate cut next month or in a few months' time is starting to look a little bit murky, especially since the latest job figures from the ABS were a lot stronger than anyone had expected, which will make the Reserve Bank's job a bit tougher. For starters, the number of people who are employed compared to the working age population has risen to a record high 64.5%. And around 56,000 people started new jobs last month, which was more than triple what economists were expecting. You can tell the RBA has been caught by surprise when you compare the actual unemployment rate, which was 4%, with the much higher figures that the bank had recently forecast. In a nutshell, this confusingly strong jobs data by itself does not support the case for an imminent rate cut. So a lot will depend on the even more crucial December quarter inflation figures, which are coming out at the end of this month. All up, this had no impact on the share market, which was already doing well before those job figures came out. So the All Ords and ASX 200 both rose by around 1.3%, driven by bank stocks like Commonwealth Bank and shares of retail and tech companies, and even Star Entertainment. The ASX followed a very strong lead from Wall Street and overseas markets, which were boosted by some better than expected inflation figures from America. Basically, core inflation there fell by a tiny fraction, down to 3.2%, which caused a bit of excitement, as markets are now betting the next US rate cut will happen even sooner. And while iron ore was steady, gold went up, but nowhere near as much as oil prices. And the Aussie dollar is buying 62 US cents. And that's finance.